Okay. So welcome students, welcome to lecture number 31, where we'll be starting with module number 5, that is deductions under subject direct taxation. So under module 5, that is deductions, as per video syllabus it covers permissible deductions under section 80C to 80U, computation of tax liability of individual, set off and carry forward of losses. This set off and carry forward of losses, you only have theory part. There is no problems involved for set off and carry forward of losses, and problems on computation of taxable income and tax liability of individuals. So today we will be seeing permissible deductions under section 80C2 ATU. Students, simultaneously we will be also covering computation of tax liability of individuals, and we'll also be seeing problems on computation of taxable income and tax liability of individuals, which we will be covering by going through or dealing with the provisions of deductions under section 80C2 ATU. So how do we compute the total taxable income of an SSE? First, we need to understand that. We have already seen how to compute income from salary separately. Income from house property, you all have only theory part. So we have not covered this, but income from house property, whatever income you get, you have to add it here. Income from profits and gains from business and profession, we have seen how to compute. Income from capital gains, we have seen how to compute. Income from other sources, you all had only theory. So when we add the income from all the 5 heads, we get is gross total income. And from this gross total income, we have deductions, permissible deductions as per the Income Tax Act under from section 80C up to section 80U, whatever sections are there, there is a deduction, that benefit that is given to an individual or maybe an SSE from the gross total income. So from the gross total income, when you deduct these deductions, you get total taxable income. And students, on this total taxable income, you're going to calculate the tax. If it is an individual, we know what are the different individual slab rates, which we have seen in module number 1. So we have to apply the tax rates to this total taxable income, and thus we get to know what is the tax liability of an individual. So whenever you all are supposed to calculate the tax liability of an individual, what you have to do is take the income from all the 5 heads of income that we have of that particular individual, derive at the gross total income, deduct the deductions, then you get total taxable income on which you have to compute the tax. So simultaneously, when I'll be teaching your deductions, I will be also covering problems as to how to arrive at the total taxable income and how to calculate the tax. So let us now deal with what are the different deductions under sections 80C to 80U and things or conditions that need to be fulfilled in order to get this
Hello, ma'am.
Students, are you all there?
Yes, ma'am.
Yes, ma'am.
Yes, ma'am.
So, did you all hear the lecture, or how was it?
No, ma'am. In between it has got stopped, ma'am.
From where can you all tell me exactly what was the last thing that because I was just continuing. I just seen the messages later on.
Ma'am, you were explaining the format, ma'am. Total taxable.
Okay.
Till total gross income.
This was the slide. Which was the slide?
Not visible.
It is not visible to you all.
No, ma'am.
Okay, just a second. Let me check. Is it visible now?
Yes, ma'am.
Yes,
Everyone?
ma'am.
Okay. Okay. So I was in till what you all have heard? Students, am I audible to you all?
Yes, ma'am.
Yes, ma'am.
Can you all see the screen? Okay. Uh,
Yes, ma'am.
let me start then with this slide. So, computation of total taxable income of an SSE. See, when we are supposed to calculate tax payable by an SSE, first we need to know the income on which we have to calculate tax. So we know that there are 5 heads of income. When we add all the 5 heads of income, you get the gross total income. Then you have to deduct the deductions from section 80C to 80U. We get total taxable income. Now, today we will be seeing what are the deductions from section 80C to 80U. Okay. And in detail, I've already explained earlier. You all can check in the video that will be uploaded on YouTube. So let us move ahead. Let us now understand the different deductions under section 80C to 80U. So the permissible deduction as per Income Tax Act from section 80C to 80U is, we have the deduction under section 80C, 80CCC, 80CCD, 80CCE, 80CCG, 80D, double D, double DB, 80E, 80EE, 80G, 80GG, 80GGA, 80GGC, JJA, QQB, RRB, TTA, TTB, and ATU. So these are all the different permissible deductions from section 80C to 80U. The entire module is to understand the different types of deductions and to know the conditions that has to be fulfilled in order to get the deduction under this particular section. Okay, so today we will be seeing the deduction under section 80C to 80CCG. So today we'll be covering all the deductions under section 80C. So let us see. Students, can you all see the screen? Students, am I audible?
Yes, ma'am.
Okay. It shouldn't be I just go on saying like how I did previously and you all are not there. Okay. So deductions under section 80C to 80U is a deduction under chapter 6A of the Income Tax Act. So chapter 6A contains deductions from the gross total income. We know that when we add all the 5 heads of income, we get gross total income. From that gross total income, when we minus the deductions, we get total taxable income on which tax is to be calculated or paid. Now, deductions in respect of certain payments. That is, whenever you're making certain payments, you will get the deduction under the following sections. That is ATC, ATCCC, CCD, D, double D, double DB, E, double EA, double EB, G, double G, GGA, GGB, and GGC. They are deductions in respect of certain incomes. When you're generating certain incomes, you get a deduction. That is under section 80, JJAA, RRB, and QQB. Deduction in respect of other income under section 80 TTA, 80 TTB, and other deductions under section 80U. So what we'll be seeing in this entire module is all these deductions, okay, which we can avail from the gross total income, but we need to analyze and understand each particular section under this deduction to know what are the conditions to be fulfilled in order to get deduction under a particular section. So let us start with section 80C. Section 80C is nothing but when you are making an investment in certain particular investment savings. That is deduction in respect of investment in specified assets. Suppose you have a money or your savings and you're investing in 16 list of investments that are specified under 80C, you will get a deduction from your gross total income. So 80C is nothing but deduction in respect of investments that you're making out of the savings that you are having. And whatever investments you're making, you will get a deduction from the gross total income. The deduction under 80C is available only to an individual or HUF. We know that SSC means individual, HUF, partnership firm, LLP, artificial juridical person, and so on. But the deduction under 80C is available only to an individual or HUF. Now, the maximum permissible deduction under 80C is 1,50,000, which means even if you're putting a savings in the list of investments specified under this section, which is above 1,50,000, suppose you're putting the amount in the investments under 80C of a sum of rupees 2 lakh, but still deduction you will get of only 1,50,000 because maximum deduction that you can get under the section 80C is 1,50,000. So let us see what are the list of contributions or list of investments that you can make under this particular section in order to get deduction. So first investment you can make is premium paid in respect of life insurance policy. Now everyone knows what is a life insurance policy. Life insurance is nothing but an insurance taken on the life of an individual. Okay. So whatever premium you're paying in respect of that life insurance policy, you can claim the deduction of that from your gross total income under section 80C. Next, in detail, we will be seeing this shortly. The first type of deduction you can claim is investment. That is, premium is nothing but a type of investment that you're making in respect of a life insurance policy. Now, suppose the premium is paid on the insurance on the life of an individual, still you will get a deduction. Suppose the individual is taking a life insurance policy on the spouse, then also you will get a deduction, or any child, minor or major. If the individual is taking the life insurance policy on his children, irrespective is minor or major, or in case of HUF, any member of HUF, then you will get a deduction under section 80C. Now let us know what is the limit of deduction that can be got if investment is made in the life insurance policy. So students, remember this. If the policy is issued before 2003, Remember, if the life insurance policy is issued before 2003, the deduction under ATC is premium paid to the extent of 20% of capital sum assured. We know that in a life insurance policy, there is something called as sum assured. Sum assured is the amount for which he is going to be taking a life insurance policy. So deduction is subject to only 20% of sum assured if the policy is taken before 2003. If the policy is taken between 2003 to 2012, then the maximum deduction is again 20%. Premium paid to the extent of 20% of sum assured will be allowed as a deduction. Suppose if the policy is taken after 2012 but before 2013, then 10% of minimum capital sum assured is the deduction he can get. Both in respect of policies issued after 2013. Suppose if policies are issued after 2013, then you need to see whether the insurance is taken on the life of a person with disability. When I say disability, means he is not able to perform as a normal person. So if he's having any disability or severe disability and he's suffering under section 80U, 80U will be dealing that it is relating to disability. So the amount of deduction will be subject to the extent of 15% of capital sum assured. And where the insurance is on life of any person other than A mentioned above. So suppose if the policy is issued after 2013 and it is a policy that is taken, just a normal life policy, and a person is not suffering from severe disability or disability, then premium paid to the extent of 10% of capital sum assured will be the deduction available. So I'll quickly first revise this. If any person is paying premium in respect of life insurance policy, you will get a deduction. Deduction is available only to an individual or HUF. Individual, either himself he takes in policy, he's getting a deduction. If he's taking on the name of the spouse, still he's getting a deduction. If he's taking the life insurance policy on the name of the children, whether he's a major or minor, still he's going to get a deduction. Now, deduction, in order to claim deduction, first you have to check the policy issue date. If the policy issue date is 2003, you have to make sure that the premium you are paying is not more than the 20% of capital sum assured. If the policy is between 2003 and 12, you have to see does not premium payment should not exceed 20% of capital sum assured. If the premium, if the policy is issued between 2012 and 13, you should make sure that the premium amount does not exceed 10% of capital sum assured. But suppose if the policy is issued after 2013, you have to see whether the policy is taken for severe disability or disability. If it is taken for disability or severe disability, you should see that the premium paid should not exceed 15% of the sum assured. And suppose if it is not taken for disability or severe disability, then you should make sure that the premium paid should not exceed 10% of capital sum assured. So let us take a problem on this in order to understand the concept properly. So everyone pay attention to this problem. Are you all with me, students?
Yes, ma'am.
Okay. Compute the eligible deduction under section 80C for the assessment year 2021-2022 in the respect of life insurance premium paid by Mr. Ganesh during the previous year 2020-2021. The details are given here under. So you all know that ATC is giving a deduction for the premium paid in respect of life insurance policy. That is clear to you all. Now, they have given the details. Details is the date of issue of policy is 30/3/2012 and this policy is taken on self. Actual capital sum assured is 5 lakh. Premium paid is 51,000. Policy date for the second thing is 1/5/2016. It is taken for spouse. 1,50,000 is the capital sum assured and 20,000 is the premium paid. Next is 1/6/2018, the date of issue of policy. The policy is taken for an handicapped son who is having a disability. Capital sum assured is 4 lakh and the premium paid is 80,000. So, will he get a deduction under 80C is the first thing that we need to answer. If yes, what is the limit of deduction he will get? Okay. So we know that entire under 80C you will not get a deduction more than 1,50,000. That we know. But we also know that if it is relating to life insurance policy, there is again one limit. So let us understand. So will he get a deduction if he's taking our life insurance policy on himself? Yes. On his spouse? Yes. On his children? Yes. Irrespective his minor, major, able, disabled, still he will get a deduction. So we are clear that in all the three cases, he will be getting a deduction. But what is the amount of deduction he's going to get? So let us see the solution. First, date of issue of policy is 30/3/2012 self. Actual capital sum assured is 5 lakh and premium paid is 51,000. And deduction under 80C is in respect of the premium paid, not the capital sum assured. So, but the premium paid should not be more than 20%. That is what we have seen here, students. See, if in respect of policies issued between 1/4/2003 and 31/3/2012, premium paid is only to the extent of 20% of capital sum assured. So, the premium, the date of issue of policy is 30/3/2012. So, it is falling under that category. So, we have to limit it only up to 20% of the capital sum assured. So, capital sum assured is 5 lakh into 20%, that is 1 lakh. So actually he paid a premium of 51 lakhs, but he can pay the premium up to 1 lakh in order to claim deduction under 80C. So 1 lakh or 51,000, whichever is lower. So 51,000 is a deduction he will get under first category. Second, the date of issue of policy is 2016 for his spouse. Now, under which category it will fall? It will fall in respect of policies issued on or after 1/4/2013, because 2016 comes after 2013. Now, will he fall in the first category? No, because spouse is not handicapped or not disabled or severe disabled. So, in any other case, that is part B, the premium paid should be to the extent of only 10% of capital sum assured. So only restricted to 10%. So what is the sum assured in the case of spouse? 1,50,000 into 10%. That is 15,000 or 20,000 premium paid, whichever is less. So which is less? 15,000. Therefore, deduction under section 80C is 15,000. Third one is the issue of date. Policy date is 1/6/2018. So 2018 will again fall under this category, but we have to see whether category A or B. Now he is a son with disability. So we have to see the first part, that is premium paid to the extent of 15% of minimum capital sum assured. Now 15%. Now actually on 4 lakh he's paying a premium of 80,000, but he will not get full deduction of 80,000. He will get maximum is only 15% of capital sum assured. So first let us see what is 15% of capital sum assured. That is 4 lakh is the capital sum assured into 15%, that is 60,000. So premium paid 80,000 or 60,000, whichever is less, so 60,000. Therefore, the total deduction that he can get under section 80C is 1,26,000 and it is within the limit of 1,50,000. Therefore, the deduction under 80C, what he'll be getting is 1,26,000. So students, have you all understood the first type of investment under section 80C? That is premium paid in respect of life insurance policy. Did everyone understand this?
Yes, ma'am.
Yes, always remember life insurance policy, you have to just check the policy date and see the maximum capping on that. Next, so the first investment under 80C was the first investment under ATC was life insurance premium paid. Suppose if you're paying a premium in respect of a contract for deferred annuity, still you will get a deduction under ATC. So there are 22 such list of investments which you will make, and you can get a deduction under section ATC, but subject to 1,50,000 only. Next, any sum deducted from the salary payable of a government employee for securing a deferred annuity. Next, contribution to statutory provident fund, public provident fund, recognized provident fund. If any contribution you're making to any provident fund that is recognized by the central government, you will get a deduction. But again, the limit of deposit in PPF is 1,50,000 in a year. So let us start and let us see a problem on this. Students, am I audible?
Yes, ma'am.
Okay. So an individual SSC resident in India has made the following deposits or payment during the previous year 2020-2021. Contribution to Public Provident Fund 1,50,000. Insurance premium paid on the life of the spouse. Policy is taken on 1/4/2015. Assured value is 2 lakh. That is 25,000. So what is the deduction allowable under section ATC for assessment year 2021-2022? So let us see, students. First tell me, if any contribution is made to PPF, Public Provident Fund, will he get a deduction under section ATC? Yes. Because in the list of investments, we have seen that contribution to PPF, he is allowed a deduction under section ATC. So deposit in PPF, 1,50,000. Okay. Insurance premium paid on the life of the spouse. Now, what is the amount of insurance premium he is paying? 25,000. But we know that if the policy is taken after 1/4/2013, the maximum premium paid deduction he can claim is 10% of capital sum assured. So sum assured value is 2 lakh into 10%. So 20,000 or 25,000, whichever is less. So 20,000 is less. So total deduction under ATC, his total is coming up to 1,70,000. But we know that total investment under section ATC is restricted to only 1,50,000. Therefore, he will get a deduction. Though he's made an investment of 1,70,000, he's still going to get a deduction of only 1,50,000. Why? Because maximum permissible deduction under section ATC is restricted to 1,50,000. So students, have you understood this part?
Yes, ma'am.
Okay. Next, out of the 22 investments, I'm just reading those investments, other types of investments. Contribution to approved superannuation fund. If he's making any contribution to the superannuation fund, he's going to get a deduction under section ATC. Any sum paid or deposited in Sukanya Samriddhi account. It is usually only for the girl child. Subscription to National Savings Certificate. Contribution in unit linked insurance plan. Contribution to approved annuity plan of LIC. Subscription towards notified units of mutual fund or UTI. Contribution to notified pension fund set up by the mutual fund or UTI. Contribution to the National Housing Bank term deposit scheme. Contribution to notified deposit scheme. Payment of tuition fees to any university, college, school, any educational institution within India for a full-time education for maximum 2 children. So suppose if the college fees has been paid, usually in the college fees, if you see the receipt, you can see there is something called as tuition fees. So that is for the giving you the education, they are charging that fees. So suppose if your parents are making the payment for your college fees Okay, and that is a full-time education in India. And your parents, if they are paying income tax, they can get a deduction under 80C in respect of the fees that they are paying, but only tuition fees. There are other things also like library, books, whatever that money that is they are paying, that is not allowed as deduction. Only tuition fees what you're paying exclusively for the study, that is allowed as a deduction. Next, that is again subject to 1,50,000. Next, repayment of housing loan including stamp duty, registration fee and other expenses. Subscription to certain equity shares or debentures. Subscription to certain units of mutual fund. Investments in a 5-year term deposit. That is, if you're doing a fixed deposit for 5 years, again subject to maximum of 1,50,000. Subscription to the notified bonds issued by NABARD. Investment in a 5-year post office time deposit, deposit in senior citizen savings scheme, contribution to additional account under NPS, national pension scheme. If you're making an additional account under that, you will get a deduction under section 80C. So students, these are the different 22 types of investments which if you are making subject to 1,50,000, you can get a deduction under section 80C. So students, have you understood section 80C? Yes, students?
Yes, ma'am.
Okay. Now let us see section 80CCC. 80CCC just says, students, that if any individual, okay, I'm talking about individual, if any individual, I'm not talking about SSC because SSC means it can be individual, HUF, company, firm, etc. But if any individual is making a payment, contribution, when I say contribution means investment, if he's making any payment, investment or contribution in the annuity plan of LIC of India, okay, or suppose in some other plan but which is set up by LIC, okay, then whatever amount he is contributing towards the plan under set up by the LIC, he will get a deduction under that. So remember, under section 80CCC, this 80CCC deduction is available only to an individual where he is dedicating his income or where he is applying his income to any annuity plan of LIC of India or with any other insurer, okay, for receiving pension from that fund which is set up by the LIC. So whatever amount he is contributing, it will be allowed as a deduction under section 80CCC. Is that clear, students? So when I say deduction in respect of contribution to certain pension funds, here certain means pension fund that is set up by the LIC of India or pension fund taken by the LIC of India. Is this clear, everyone? Section 80CCC?
Yes, ma'am.
Okay, let us now see section 80CCD. Now what is section 80CCD tells us that if any contribution is made to a pension scheme that is notified by the central government. Now, if central government is notifying some pension scheme and as an individual, you are making contribution to that pension scheme that is notified by the central government, you will get a deduction under section 80CCD. So let us see what is the deduction you will get. First, if the eligible SSC is an individual employed by the central government on or after 1/4/2004. Suppose if you are an individual, it is available again to an individual. Suppose if you are an individual and you are in working with the central government only on or after 2004, and suppose you're making a contribution in the scheme notified by the central government, you will get a deduction of only 10% of your salary. Suppose if you are an individual who is employed by any other employer. When I'm saying any other employer means it can be a private employer, not the central government. Still the deduction you will get is 10% of your salary. Or if it is any other individual, you will get 20% of gross total income. So remember students, section CCD tells that if you're contributing in any pension fund that is notified by the central government, you will get a deduction of 10% of salary or 20% of GTI as the case may be. Now we have something called as section CCD 1B. So what is section CCD subclause 1B? It says that apart from section CCD, suppose if any individual is contributing to the NPS scheme, NPS is National Pension Scheme, he will be given a further deduction of 50,000. Apart from that 10% of salary and 20% of GTI, if any individual is contributing to the NPS scheme, National Pension Scheme, he will get an additional benefit of 50,000 as a deduction. Next is section CCD 2. Let us see this section. That is, we have seen section 80 CCD. We have seen section 80 CCD IB, which says 1B, which says that additional contribution to NPS, we can get an additional benefit of 50,000. Now let us see 80 CCD subsection 2, which says that if any contribution is made by central government to the NPS account of its employees, okay, suppose if the central government is contributing to the account of the employee or any other employer, not central government, suppose if I'm employed under a private organization, if they are contributing to the NPS account of the employee, then you will get a deduction of 14% of salary if it is a central government, and if it is any other employee, you will get a deduction of 10% of salary. So is this clear, section 80 CCD? Students, is 80 CCD clear?
Yes, ma'am.
Okay. Next, section 80 CCE. Now what is section 80 CCE? Says that whatever contributions you are making under 80C, 80CCC and 80CCD, the total of that should not exceed 1,50,000. This is all section 80 CCE is saying. So we know 80C is that investments in 22 list of categories. If you're making an investment, you'll get a deduction. 80CCC, we know if you're making an investment in the pension scheme of set up by the LIC or given by the LIC, you'll get a deduction. 80CCD, we know if a pension scheme that is notified by the central government, if you're contributing towards that, you will get a deduction. So what they're telling, the total of all these three investments should not exceed 1,50,000. That is told under section 80 CCE. So let's just see this particular table in order to summarize whatever we have dealt in till now. Section 80C is available when you're making investments in the different categories like life insurance premium, in the provident fund, and etc. 22 more other set of investments what we are seeing. The ceiling limit is 1,50,000. 80CCC, we have seen that whenever contribution is made to certain pension funds, when I say certain pension fund means it is LIC, then it is how much? Ceiling limit is 1,50,000 again. Now 80CCD1, contribution to NPS of the government is 10% of salary or 20% of GTI as the case may be. So what they are telling under 80CCE, that the aggregate deduction under section 80C, 80CCC and 80CCD1 should not exceed 1,50,000. So the ceiling limit is only 1,50,000 when we add the deduction of all this section. But in this 1,50,000, 80CCD1B and 80CCD2 subclause 2 is not covered. So apart from 1,50,000, you can get additional benefit of 50,000 if you're contributing to the NPS account, and if your employer is contributing, and if your employer is a central government, 14% of salary you can get as a deduction. And if the employer is any other employer other than government, you can get a deduction of 10% of salary. So apart from 1,50,000, these are the additional deduction that you can get. So we have covered section 80C, ATCCC, ATCCD. Under ATCCD, we have seen ATCCD1, ATCCD1B, ATCCD2. So have you all understood this, students, all these sections? Majorly what is asked in the exam is ATC and ATCCE. Ceiling limit you have to check. But that doesn't mean you ignore this. You also need to know the limit for all this. So students, have you all understood this particular section? All these sections of ATC?
Yes, ma'am.
Okay. So let us see one sum on ATC. Okay. The gross total income of Mr. X for the assessment year 2021-2022 is 8 lakh. He has made the following investments or payment during the financial year 2020-2021. Contribution to PPF. Students, tell me under which section will it come? Will it come under the section ATC, ATCCC, ATCCD or ATCCE?
I'm ATC.
Very good. Now, payment of tuition fees to Apijay School, New Delhi for education of his son who is studying in class 10. Sorry, who is studying in class 11. So tell me, this deduction can he get?
Yes, ma'am.
Yes,
Yes, ma'am.
very good. Very good. That comes under section ATC. Repayment of housing loan taken from Standard Chartered Bank, 25,000. Will he get the deduction of repayment of housing loan? Is it covered in the investments under ATC? See, students, out of the 22 investments that we have seen, it is covered, right? See here, I'll just show you all. Contribution to, repayment of housing loan is covered under this deduction. It includes stamp duty, registration fees and other expenses. So repayment of housing loan is covered under ATC. So will this come under section ATC?
Yes, ma'am.
Okay. Next, contribution to approved pension fund of LIC students. Tell me under which section it will come. Will it come under section ATC, ATCCC, ATCCD or ATCCE?
ATCCD.
ATCC?
D.
ATCCD is of the central government, pension fund of central government. ATCCC is
Triple C.
LIC, right? CS students. We have dealt in, right? Or I'll show you the summary only. See here. Contribution to certain pension funds of LIC. This is contribution to NPS of government, CCD. So it will come under ATC. So now you all are able to analyze, right? Now we'll see the solution. They want to know what is the eligible deduction for this. So deduction under ATC, contribution to PPF, they have written 1,50,000. Why? Because it is within the limit of 1 lakh. 1,10,000 they have written. Why? Because it is within the limit of 1,50,000. Payment of tuition fees, as it is, they have taken 45,000 because there is no ceiling for this. Repayment of housing loan, they have taken 25,000 as it is. So total deduction under ATC is 1,80,000. But we know that under section ATC, maximum deduction you can get is only 1,50,000. So restricted to 1,50,000, being the maximum permissible deduction under ATC is 1,50,000. Though he's made a investment of 1,80,000, still he is going to get only 1,50,000 deduction. Next, deduction under section ATCCC, that is that pension fund of LIC, which is 1,05,000. So 1,05,000. So total deduction under total deduction under ATC plus ATCCC, that is 1,50,000 plus 1,05,000 is nothing but 2,55,000. But what does section ATCCE tells us? Section ATCCE tells us that the aggregate, means the total of deduction under section ATC, ATCCC and ATCCD should not exceed 1,50,000. So 2,55,000 is exceeding 1,50,000. So he will get a deduction of only 1,50,000. So deductions allowable under chapter 6A for assessment year 2021-2022 is 1,50,000. Students, have you all understood this sum?
Yes, ma'am.
Remember,
Ma'am.
under ATC also, the maximum deduction is 1,50,000, and ATCCE also tells us that the total of ATC, ATCCC, ATCCD should not exceed 1,50,000. So maximum deduction you can get is only 1,50,000. So is this clear?
Yes, ma'am.
Okay. Now the last deduction under C category is ATCCG. ATCCG says us that if you are making any investment under Rajiv Gandhi Equity Savings Schemes 2013, you will get a deduction. What is the amount of deduction? 50% of amount what you're investing in the equity shares, or 25,000 rupees, whichever is lower. So this is not that important, but I'm just telling you all that deduction under CCG means if you're making any investment in Rajiv Gandhi equity saving scheme, deduction is 50% of the amount that you're contributing, or rupees 25,000, whichever is lower. So by this, we have completed the deductions under section 80C. That is, we have, if you're making any investments in the 22 mentioned list, you will get a deduction, and the maximum deduction under ATC you can get is only 1,50,000. ATCCC, when you are investing in a pension fund of set up by an LIC or annuity plan given by an LIC, you will get a deduction. ATCCD is when you are contributing to the NPS, National Pension Scheme, that is notified by the central government, you will get a deduction. ATCCE tells that the total of ATC, CCC and CCD should not exceed 1,50,000. That is told under section ATCCE. And ATCCG is saying that if you're contributing to Rajiv Gandhi Equity Savings Schemes 2013, you will get a deduction of 50% of amount that you invested, or 25,000, whichever is lower. So today we have completed the deductions which are falling under the C category. So students, have you understood?
Yes, ma'am.
Okay. So we are done for today's class. Thank you so much, students.
Thank you, ma'am.
Thank you, ma'am.